So you're ready to buy a house, and so what's the next step? Well, welcome to our channel, which is Everything and Anything Real Estate, and I'm Rami Dhillon with Realty ONE Group Southwest in Temecula, California.
I'm Alfred Ramirez from Impulse Capital Partners.
So Alfred, I get a lot of buyers who are really anxious to buy a house, and they call me and say, hey, can we go look at this house and look at that house? And they're all over the board. Looking at a $500,000 house, $1 million house, or whatever it is. And we don't even know.
They don't even know the process. They don't even know where to start.
No, they don't know the process. They don't know, should we be looking at houses first, or should we get a loan first? I mean, we don't even know how much of a home they can buy at this point.
Yeah.
So the first step, in our opinion, and most realtors and investors' opinions, is that you get qualified for a home loan. And why do we do that? Why do we need to get qualified for a home loan first?
Well, when you're buying for yourself, you're buying because that's the house you're going to live in.
Right.
So you want to know how much you can afford. You don't want to go out there and buy a house, say $500,000 with the interest rates right now, averaging around, 5.5% to 6%, and you're going to end up with a $2,300 payment, when you can only afford a $1,800 payment. So you want to know where you're at so that you're comfortable, when you're purchasing that home. Right. Again, you don't want to go out there and purchase a home that you can't afford. Well, for one, you won't qualify for it. You have to have a pretty good credit score in order to qualify for these loans. So I would say the first step would be to find a lender, or a broker. I would go with the broker because you have more options with the broker.
Yeah, broker can source out different lenders, so they know all the different lenders and know all their their guidelines. So the thing is, as a real estate agent, I do get a lot of buyers. They're really excited, which is obviously they are. They're going to be buying their first home, and they just want to get out there and start looking at houses. And in a market where, especially our market today, where it's really competitive, we have less inventory and more buyers than we have houses. So, and there's a lot of competition. So you're out there looking at houses, and all of a sudden you want to put an offer on a house, and you're not pre-qualified or pre-approved for a home loan.
Yeah. So
now all of a sudden, you got to back off. That house is going to be gone within days.
Yeah.
Now you're going to start calling you.
Yeah.
And say, hey, Alfred, I need to get pre-qualified for my home loan.
By that time, your house is already gone.
By that time, it's gone. So this is not a market where you can kind of take your time. And
it is slowing down, but it's still pretty competitive.
But I think in any market, the first step is get pre-qualified for a home loan. Find out how much home you can buy, whether it be 500,000, 6, 7, 8, whatever it may be, and then also see if that payment for that price is
going to fit your budget,
or you're comfortable with that, right?
Yeah. Ideally, you don't want to be paying a house payment and then you got no money for food,
right?
You got to be able to live.
Food's important. Yes.
Yeah.
So ideally, I think to be so you don't bite off more than you can chew. I think if you want to keep your housing expense at about 25% is comfortable.
You would like to, but here in California, you're probably looking more at 50, 56, 60% of your income going toward your home.
Yeah.
That's not ideally, but that is the average.
So I'm just going to tell you what's ideal, and but in reality, what happens is what Alfred just said is that lenders will go up to 50% or so, depending on the different types of financing, and allow you to purchase a home with your debt to income is about 50%.
Yeah.
So that's the first step. So now you're pre-approved. We're going to use a round number like 500,000 as an example. So you're pre-approved to buy a house at a purchase price of 500,000. What do we do now?
Well, now you call Rami here. Say, hey, Rami, here's my pre-approval letter. I'm ready to go. Let's start looking at houses. Let's set up a couple appointments.
Right.
Rami's Rami, you're buyer's agent, right?
I do buyers. I do sellers. I do both. Yeah, absolutely.
So you're going to call Rami up, say, I need a house. I'm looking for a house. Rami's going to find you a couple houses, shoot them over to you. You're going to tell Rami, hey, these are the houses I'm interested in.
Right. And
then set up some appointments with Rami so you can kind of go check out those houses. Once you find that house and you're in love with that house, well, you're going to put an offer in on it.
Right. So, I'm going to initially meet with you folks or the potential buyer and sit down, find out what kind of house they're looking for, what their requirements are. Then we start looking at homes. Then we put an offer in, like Alfred just said, And the offer, so for those that don't know, so it's customary to provide your pre-approval letter, your pre-qualification letter, along with your proof of funds, and then obviously the offer. And so then once the offer gets accepted, so let's say your offer is the most attractive, you beat out all those other people right now. You got 5 or 10 other offers, and so you get your offer accepted. Then what? Then what's the next step? What happens then?
After that, once the offer is accepted, it goes into escrow.
Right.
Escrow is basically, you want to explain what escrow is, Ron?
Yeah, so escrow is in California, we use escrow companies for handling, they're an unbiased third party that handles basically all the paperwork involved with the transaction. The paperwork is, first of all, the offer acts as the escrow instructions as to what needs to be done, the earnest money deposit, the purchase price, all the contingencies involved, loan approval, inspections, all that is outlined.
Escrow basically protects all parties involved, and they ensure that what's written in that purchase agreement is followed by both parties.
Exactly. And they also handle all the monies involved. The earnest money deposit is going to go into escrow's account. They're going to be holding it.
But what's earnest money?
So the earnest, so when you write an offer, I should have told them that. So when you write an offer, you want to show that you've got some skin in the transaction. So it's customary in our area for that earnest money to be about 1 to 2%, maybe up to 3% of the purchase price. And that amount, so let's say 1% of $500,000 is $5,000. That earnest money goes into escrow, and that can be applied towards your purchase. It can go towards the down payment. And so it basically shows the seller that you've got some skin in the transaction. Now, I said
that you're serious about buying the property. Is basically what you're saying.
Right.
The more money you put down, essentially that's what you're telling the buyer, or the seller is, hey, you know what? I'm going to put $20,000 down because I'm serious about purchasing your house.
Yeah.
That's what it is, versus you might have another buyer that come in, might be offering a little bit more, but hey, I'm only putting $10,000 down. You're not as serious as the other buyer is putting $20,000.
No, that's very true, because I've had multiple offers where one guy actually put only $500 down. We're looking at a $500,000 property, and then I've got other buyers are putting in a minimum of $5,000, $10,000, even up to $20,000. People, they're showing, look, I mean business. Yeah, I want this house. I am putting some skin in the transaction, and so the seller will gravitate towards that offer. They're going to say, $20,000, $500. Oh my God! Yeah, right. There's other factors involved as far as the offer, but that really that is important.
And don't let the EMD scare you either. Earnest money deposit scare you either, because depending on your situation, you might be going FHA, which only requires 3.5% down
payment.
So you might not be looking to put $20,000 down, because your closing cost is only going to be maybe $15,000. Right. So whatever you put down, you're going to get back at the closing.
Right. So if you don't use all of it, it goes back to you. Right. So it's okay to put a little bit more down if and just to show them that you're serious. Yeah. All right. So we got the offer accepted. We're in escrow.
Now you got your due diligence period. The most important part of the whole transaction will be your due diligence period. Right. Is this house falling apart? Is it as beautiful as it looks outside as it does inside?
Right.
Sometimes it doesn't.
Right. So the due diligence. No kidding. So the due diligence period in a normal purchase of a house there's 3 major contingencies. There's a lot of contingencies, but 3 major contingencies are the loan, the appraisal, and the home inspection. So that's your due diligence period. You're going to inspect the house. You're going to hire an inspector to do it.
How long do I have for my due diligence period?
So in today's purchase contract, the standard form contract base says 17 days for all 3 of those. It used to be a little bit different.
Are those business days or those calendar days?
That's a very good question. They're calendar days. So 17 days from the date of acceptance. You could you can write in the contract however you want to do. You can do it from the date that you open escrow, but the standard form contract says from the date of acceptance, 17 days, right? So once the 17 days pass, and you get to that point, the seller is going to ask you to sign off on those contingencies. Your loan is approved. The appraisal came in. You guys have, or if it didn't come in at value, whatever, you've negotiated with the seller. You guys are happy. You're moving forward. The home inspection looks good. Or if it doesn't look good, you can potentially ask the seller for, request some repairs and whatnot. Seller doesn't have to do it, but it doesn't hurt to ask. And so 17 days, all those things are checked off. You're ready to move forward. You sign off on those. Now you're all in, basically.
Yeah. Now, once you sign that off, now your earnest money is now the seller's earnest money.
I
mean, there is some contingencies to get out of that.
Well, the way I like to say it, it's in jeopardy.
Yeah.
It's in jeopardy. That's a more accurate way, because it doesn't. It's not black and white. It doesn't automatically go to the seller. Don't ever think that.
And nothing gets. Yeah. I guess distributed until you close. But,
it's in jeopardy. If you sign off and then back out, it's in jeopardy. But so at this point, if everything looks good, you sign off, you don't back out, you move forward. Now we move towards closing. So the closing, basically, the remainder of the period, within about 5 days before the close of escrow, you have time to
do another walkthrough.
To do your walkthrough, right? Your visual inspection. So you ideally want to do that a few days before you close. And at this point, and then the purpose of that, the final walkthrough, is not to ask for more repairs or anything like that.
It's just to ensure, especially if the homeowner was living there.
Yeah.
You don't want to make sure, hey, the owner said they're going to leave their couch, or they're going to leave this, or they're going to leave the refrigerator, and you go through your walkthrough and all that stuff's gone, and you're like, well, hey, what happened? This was agreed upon, and it's not here. Or even when he's leaving, and there was a hole hiding behind the couch that you didn't see,
or they're banging up the walls as they're leaving, things like that. Basically,
99% of the time it doesn't happen, but
it doesn't.
There is that 1% that does.
That's the purpose of the final walkthrough, to make sure those things didn't happen, and also to see if the repairs that you requested were completed, and also the house needs to be substantially in the same condition it was when you first viewed it. That's the whole purpose, and to look at the repairs and all the fun things that Alfred just mentioned. Okay, and then so you're satisfied. You do your final walkthrough, and then at that point, if you wire your funds to escrow to close, and then you move towards closing, and within a day or two. If it's a financed offer, you have a loan, a mortgage, then the loan funds, and then
you get keys.
Then they record the deed at the county recorder's office. Then you meet your real estate agent at the house, and he hands you off the keys to the house, and that's and you're done.
Done deal.
Yeah.
Just don't forget to make your payment.
Yeah. So we basically just covered a general idea of the process. There's a lot more details. We can on later videos cover how
we could definitely go into more of the loan process. Like I said, there's a lot of different kind of loans you could go out there and get.
Right.
There's not just it's not cookie cutter to each individual. Each individual's has a different scenario. I deal with a lot of investment loans. I also deal with some retail stuff as well.
Right.
But so it's not cookie cutter. But we definitely get into details about other loan products. And other stuff as well.
So we just cover the basic process. So later videos we're going to go more detail about what is earnest money deposit. I actually have that in one of my previous videos. That cover the different contingencies, what to look for at an inspection. So we'll cover a lot more of all that. So if you folks liked our video, give us a thumbs up, subscribe to our channel, leave some comments.
Definitely leave some comments. And I know me and Rami were discussing the last time maybe about maybe bringing in a title company or an escrow company, something in that aspect. If you guys would like to hear from those kind of people, let us know. Put some comments inside the comment box and let us know. We could definitely get those people on here. If you guys have any specific questions about loans or
we can do that.
Or the real estate process, definitely let us know.
And we're planning on getting talking to a home inspector, termite company. Whatever you guys might want to hear from.
AC, heater,
Yeah, absolutely. Okay. Well, again, thank you for joining us today. We really appreciate it. and we'll see you folks on the next video.